Good day. I am Edwin de Jong, tech analyst from Edison. In this interview, we will dig deeper into JDC Group's business model and strategy. JDC Group is an insurtech company with a market cap of almost 300 million. Look at Edison's website for more content on the company. A warm welcome to Mr. Sebastian Grabmaier, CEO. Hello, Sebastian.
Yeah, hello, Edwin.
The core of JDC's business model essentially is taking part of the commission fees generated on your proprietary developed advisor tech platform. Could you elaborate on how the insurance market and adoption of technical platforms are developing in the markets that you are active in, and how this year is going?
Yeah, so the insurance industry seems to be a little bit anachronistic, right? So whereas in investment, everything is done digital, in insurance, it's done in paper. And looking back from 10 years from now, we'll think that it's quite odd that the entire insurance industry is not digitized yet. And we, as JDC Group, we help the insurance industry, so both the product providers and intermediaries, to digitize and have digital process in place. So our core business is to take in the data of all the insurance providers in the market. There's 220 insurance groups, to standardize the data, process the data, and then make it visible in visualizing systems such as our customer relationship management system, ICRM, or our smartphone application, Alles Meins.
And how is this year going?
Well, this year is very good. So we have tailwind in all kinds of product lines and also tailwind in all kinds of customer groups. So we expect a growth of more than 20% this year, bringing our turnover up to 220 million, as there's a strong tailwind in insurance, life insurance up 25%, also P&C insurance up 20%, and also investment due to a very good development in the capital markets are up, and then real estate is coming back and financing. So we look into a very successful year, 2024.
Okay, clear. And recently you acquired Top 10 Financial Group. With that, you acquired a new platform and a significant revenue stream in investment management solutions, other than insurtech. Could you explain what the rationale is behind this acquisition?
Yeah, for the last decade, the entire investment sector did not seem to be very attractive, but now we have a switch of clients searching or looking for portfolio management systems. And now as the huge amount of investment volumes rather can be converted into portfolio management systems or managed account systems, there's more margin to be earned. And this is also the core of Top 10's business. That's about 2 billion in investment assets, of which about 500 plus million are now already in portfolio management systems. And this moves up together with advisory mandates to 1.2 billion. And together with the portfolio manager we already own in the group, we will have a 2 billion portfolio management company that's among the top 20 in the German market. So the rationale is we bought Top 10 quite at a reasonable price, and we will earn about 1 million a year. So the earnings multiple buying price will be between 5 and 6 in the end. So it's a very attractive target.
Yeah. And next to Top 10, you also stepped into a joint venture, Sumitas, with Bain and your major shareholder, Great-West Lifeco. How does that benefit you so much if you only have 10% in the joint venture?
Yeah, you can see that there's a lot of private equity money international money coming into the German market, as the aggregators bought a lot of commercial brokers in the US and the UK. So right now there's about 1,000 targets above 1 million in turnover in the German market, with a age topic, as most of these owners are going into their pension age. So there is now buyers and aggregators who buy these commercial brokers, and our joint venture with Bain Capital and Great-West Life is one of them. So month over month, we be buying 1 or 2 brokers a month to aggregate both turnover and EBITDA earnings, so that we are now creating our own big commercial broking company. And as a platform, we have a strong interest that the platform delivers processing for these target brokers, and then for the final target broker. So we are creating our own biggest client, and looking forward for the first turnovers coming from the Sumita side.
Yeah, very, very clear. Now, if we take a step backwards, if you look at the last 5 years, you started out as a company with 95 million turnover. Last year, you were a company with 172 million turnover, and the technical platform is now largely developed. Also, many large savings banks and cooperative bank-related insurers are part of your platform and taking their first insurtech steps. How would you like to see the company in 5 years' time?
Well, we can now see that we reached this inflection point, right? So the last decade, there were hard years where we put a lot of CapEx. We used a lot of CapEx to improve the platform. Now the platform is paid for, so the costs are completely reflected in our P&L. And now the platform starts to earn money. And as we now expect a 20% plus growth year over year from now on, with all these big contracts with the savings banking organization, the cooperative banking organizations, Lufthansa, BMW, Volkswagen, all these big players, and some other big ones to come. We now are on a growth path of about 20% plus, and therefore we expect growth to fuel earnings, and we expect earnings growth of about 30% plus every year. So we said our investors and the market that in 25, we expect 250 million in earnings of EBITDA of more than 20 million in 25. And then we now progress in direction of 500 million, and we will earn about 60 million EBITDA if we have 500 million in turnover. And this will happen in the next years to come. And both of us, Edwin, we will then have a toast, definitely.
Yeah, absolutely. Okay, yeah, those were my questions. Thank you very much for the interview, Sebastian.
Yeah, thank you very much, Edwin.
All right, bye.